Hi, Warriors. How's everyone doing? Mike, Steve, AJ. Hi, Blake. How are you today, bro?
Good
Let's.
morning.
Ran is here. Man, how are you? Guys could hear me okay, right? Hugo, Ingmar.
Yeah, good morning. I can hear you fine, Coach.
Oh, all right, thanks, buddy.
Yep.
All right, so good day, good evening, everybody. Uh, the feature in FX, at least for what I see, is U.S. dollar yen taking out all the stops above all those tops and stretching up close to 155. So that to me is important, especially if this ends up not being um, a breakout, but ends up being a false breakout, which would take it back under these highs. Okay, you could have just a horizontal line there. I think yen has to hold there, or it's a kind of a danger signal that it's not a real breakout. So that's what I see today. Let me bring in the guys. Uh, Start with Kman. Good morning. One of our attendees,
Morning.
Brand, said you made a good speech about the Japanese yen today. You want to give us the cliff notes?
No, we were actually talking about the potential of starting to see interventions since the MOF and the finance minister, the boss of the MOF, Katayama, is keeping the rhetoric pretty the alert levels pretty high. As I said already yesterday, I think I'm not sure if it was on Face, but for sure on the Flow Show as well. They all know very well with all the programs that Takaichi and her team are putting in place, the danger for the yen getting sold off even harder. And they try to keep the market on their toes. We also think that, and I personally also think that they may not wait for as long as Kuroda, not Kuroda, in his day, who was it? When he was finance minister, when Kuroda was at the Bank of Japan, I forgot. That they may not wait for as long as the prior team before really intervening, because letting it go, the further they let it go, the more the market will get
Yeah.
comfortable selling yen, and the harder it will be to stop it. So what I basically said is it's maybe better for them to intervene sooner than to wait for 160, 165 in the dollar yen before hitting it, because then they could only bring it back to where we are now. As if they start on the next, let's say, acceleration, maybe 156, 157,
Yeah.
they are going to scare away some of the speculators at least. So that was just thinking about the possibility, and weighing the options that they have, compared to all the plans that they are putting in place, left, right, and center to support firms, economy, etc. And on top of it, they won't be going into the black book for the U.S. Treasury, because Besant will let all the green lights open if Japan wants to strengthen the yen a bit.
Okay, yeah. So do you think the U.S. might help them with an intervention? I mean,
Um,
we're not in favor of a weaker yen. I mean, if we're doing tariffs, one of the things to offset tariffs is debasing a trading partner, debasing their currency, whether it's intentional or not.
yeah,
So
but
could they get the U.S. to help them sterilize some of that?
um, they could call the Fed into play, but the decision would always be made by the MOF. They are in contact very regularly, right? So
Yeah.
the Besant will at least be made aware if they ever decide to step in. We may still be one or even two notches away from real intervention, but and they at least will get the green light. And but the Fed to for the Fed to help, it's going to require sorry a a very specific request. Yeah. The Fed is not there to say like, oh, right, let's go and help them along. No, they will have to be asked to do so and tasked to do so.
I see.
Um, but to have the bigger impact, that's probably going to be yeah to yeah have the bigger impact if the Fed would do it as well. But the Fed will always do it on behalf of the Bank of Japan, right?
On behalf, right. Okay. All right. Appreciate that insight, Kman.
Yeah, no problem.
While I have you,
Mm.
gold hasn't made a new high today. Looks like it could. I mean,
Yeah,
not
but we
not
haven't
in.
put it another lower.
Well, I mean, not a. I mean, take out yesterday's highs anyway. It's kind of sideways
Uh,
here. I had a buck in silver on a scalp. I pulled only 30 cents out of it
mm,
before my BE got hit, but now,
there's nothing bearish about those instruments. Nothing. If you look at yesterday, the past 24 hours, we had two attempts under 41 in gold, and it's already back up to 41 and at 41.30. I mean, and silver is
a
right at
monster.
one. You know, I mean,
I
yeah,
wonder
they
how
can.
much silver has retraced. I didn't do the fibs on it up here. It still could be a failing rally. I mean, as strong as it's been, this could still be a failing rally.
50, yeah, 52 and a half is the 71.8 of the
78?
is the
Se
78
uh,
78.6, is it? 78.6.
uh,
That's
what is 2.5?
that's 52, 55-ish. Yeah, yeah.
So are we at 68, 61%, or we've
We're
taken that out?
above. The 61 was 51.
51 even. Okay.
Yeah, 51.05.
So it's in the middle between the
Yeah,
two. Okay.
yeah. But I mean, when I walk in and I see well, silver is higher, but gold not holding him below 41 twice. That's not a bearish signal to me. Huh? Mm.
Well, yet.
Well, yeah, but I mean, okay, if you want to
I mean,
stand in
I
front
guess.
and if you want to stand in front and take $25, yeah, I mean, obviously that's a
Yeah.
trade. There's no doubt about it. But if I look at what's happened the past 24 hours, two attempts under 41 have straight away been balled up. So we need to get below 41 and hold below 41 to have a chance to
Okay.
get
So
back
that would
lower.
41 would give you some confirmation. If we take out these loads, then you
But
have a
that's exactly
reason.
what I'm saying. Yeah.
Okay. All right.
But the, the
So,
the one thing though, and actually we mentioned that as well and I mentioned that as well this morning. Um, if ever we would run into Japanese interventions, I wouldn't be short gold, huh? Because that thing is going to rally $100 during the interventions.
good point. Okay. So, any comments on euro or
Oh,
cable?
nah. I mean, rejection of the 116 with 25 pips below. 115.40, 116. That's what I'm watching. The one that is trying to move outside of its last box since the start of the week is Aussie, but it's all very shy. Nah, for the rest, Swiss is still doing well because they could sign the deal with the US tomorrow on Friday. Rand is supported because they're presenting the budget and actually nailing down the CPI much closer to 3%, which is if they succeed in doing that, that should be positive Rand because that would reduce the deficit. Yeah, there's a few things going on. But they're just having my attention. I'm not specifically trading much of them. I'm just still long euro yen
Okay.
and a bit of euro sterling because euro sterling is big data dump upcoming in the UK. GDP, industrial production, manufacturing production, trade balance, investment numbers, you name it. That's coming the next, well, this late this evening for you and very early in the morning for us.
Okay, so drew this line last week for a possible third drive in euro yen. Here we are.
Yeah, if you look at the ultra long term, we are about on it. It's since the euro has been created. Euro yen is now is 50 pips away from a 30-year trend line.
Okay. Yeah, those are, that's pretty long term. So you're saying it would break out if it kept going out of a 30-year downtrend
I
trend line? It's a downtrend trend
if
line?
if there was no risk of interventions, I tell you the yen is going to lose another 10% easily
Okay. There are a
on the
lot
back
of
of what
people feel
AG
that.
is doing. Huh?
Yeah, a lot of people in agreement with that you could
Oh,
just
yeah,
sell the
man. I
yen
mean,
forever.
yeah, the way it's really AB version 2. She's going to pour money in everything. I mean, use public money to build or start faster the nuclear plans, helping the companies to soften the blow of the 50% tariffs. She's just pouring money in everything. And don't forget that they also made a promise to invest over $500 billion into the US. So I mean, I
Yeah.
don't see any fundamental reason to buy in. Zero.
Okay. All right. Thank you, Kman. A lot of conviction today. Let's move over to Ryan. Ryan, good morning, buddy.
Morning, mate.
So Canada, still a higher low. Is
Yeah,
this an important level to you right here?
it's become an important level. You look at an
Oh yeah, there
hourly.
you
Yeah, there
go.
we go. Yeah, it's the bounces a week. The first test of 140 got up to that 140.30s, failed. The second test and bounce got to the 20s, and we're failing there. Can't get through. I think this is a question of if rather than when it breaks down below
Okay.
that level. And I think the way it's building, I've got a level 39.78. I think if we break this 140, there's probably going to be enough in a tank to take it through that level as well. So we could be
Okay.
getting into the low 139s. But this has
Yeah.
this has light switched since that jobs report last week.
Right.
It's definitely in rally sell mode now.
Yeah, I have a lot of stuff here, Ryan, right around what you're talking about.
Yeah,
The moving averages converge on the daily,
yeah.
and I have this black line here for a reason. Um, so
I might have lent
looks
it to
like
you.
maybe what's that?
I might have lent it to you the other day.
Yeah, you lent it. All right. I'm renting it from you.
Yeah, I'll send you an invoice, mate.
All right, buddy. What else is capturing your attention?
Yeah, obviously speaking about that dollar yen, we are both me and Kay are getting a little bit itchy about intervention, particularly if we get through that 155 level. Just the way the rhetoric's going at the moment, I'm just trying to work a piece of. Well, I'm going to take a good chunk off my long if I can get it up near close to 155 from yesterday. But yeah, I
That was
think
a great trade. I mean, you knew right away. You knew it when the end came off. You said, "Well, it looks like I'm going to do a little fade here."
yeah, it just
Nice,
looks
nice trading.
it looked a big overreaction because no one actually knows what that ADP data actually means. But this one worked. But yeah, I think if you're trading yen, you have definitely got to be careful because we've got a different government talking about the yen in this one than prior governments. They're far more anxious about it. But the other one I'm looking at is dollar mex. We
Okay,
could be getting a test at the bottom. We've been talking about this
right.
zone down here, 18, 18.20,
Yeah,
18.50.
yeah,
That is, you look at that.
yeah,
1, 2, what's that? 6 days. We're in the 6th day now of
yeah,
declines.
yeah.
So we could be getting a test on that against that lower edge. I might give that a little go. But if we break there, we could be 18 or sub 18 pretty quickly, I think.
Okay. Anything with the yuan?
That's back to being a bit steady
Yeah,
again. It had its little run around late October, but now everything Trump and Xi are best of pals again. There's no need for them to move this about, so they're going to keep that locked up pretty tight until we get the next blow up, of course.
okay.
Hey,
And
do you
go
mind? Do you
ahead.
mind if I jump in here real quick, Coach?
Go ahead, bro.
I was gonna ask Ryan about. No, I was just gonna ask him about
Oh, okay.
the UK political situation. Yesterday, you jumped in late in our chat room. Here, I'll pull up the Sterling really fast. You jumped in our chat room. Well, you're always in our chat room, but you jumped in there saying that we gotta be a little weary of what's happening on the political front in the UK, and we need to start watching gilt yields. So what's happening in the UK? Because I see Starmer's out, talking about certain secretaries and whatnot today.
Yeah.
What's all the hubbub about?
Yeah, so last night there were stories circulating that one of his own ministers, the health minister, was going to look to challenge him for the leadership role, which means a whole political bum fight, which is not good going into if that happens before the budget, which everyone's nervous about anyway. Investors won't like it because you don't want political upheaval at any stage, particularly just over a year into a new government. And part of the story was that Starmer had apparently been speaking to various firms and investors and whatever, who warned him that if it was anyone other than him as PM and Reeves as Chancellor, the bond market wouldn't like it. So now he's sort of been tied around the neck by market moves. If he does anything bad and the market moves against him, he's got a problem. So the guy who was supposedly challenging has denied it, which, as I've been saying this morning, nothing is official until it's officially denied. But it might calm down, but it could be something that rolls on in the future, particularly after the budget. It might come to a head again if his own MPs don't like his Chancellor's budget. Gilt yields were gapped up a little bit this morning. Nothing huge, but it was still a reflection of what we saw. They gapped down yesterday on the jobs data. They gapped up again today on that news. So
Got it.
never a dull moment.
So if for some reason they start taking off again, we need to go, holy crap, Sterling might really come under pressure. I mean, because Sterling looks like the weak sister as it is. I mean, we got Euro Sterling, as Mr. Michael Brown loves to call it, the Euro Sterling, which is at new highs or new trend highs. We're testing them right now.
Yeah, it started this morning. As I said, we got that pop up in Euro Sterling, the pound getting sold off. At the moment, we've got the negative news is just sort of piling up. Bad jobs data. If we get bad GDP tomorrow, that'll be more fuel on the fire. We've got this leadership fight. We've got the budget. At the moment, there's no real reason why people should be going hand over fist into the quid.
Okay, and I mean, and Kman was just mentioning not only is there GDP, there's construction, goods trade balance, index of services, industrial production, manufacturing. It's a whole shit ton of data coming out tomorrow out of the UK, and after the jobs data on Tuesday morning, it does look a little wobbly. All right, thanks for the clarification. Go ahead.
That does give a potential opportunity if it's fairly good data. Then that might give people a little rally in the quid, which I think the main market will probably hit. So that might be something to look at.
The Euro Sterling. There's a chart, and I'm gonna ask you or Kman. Well, I can ask Dale too if he, you look at the Euro Sterling. The Euro Sterling is basically starting a brand new. Now, obviously, tomorrow's going to be a pretty big deal. In my opinion, it's starting a brand new range to be traded longer term. I mean, we just went from this lower range. Here, let me grab this right here. We've gone from this lower range of about, the last couple of years, right? And now we're going into the upper range, which will take us. It's not uncharted territory, but you look at this chart like, oh, we've been here before. We're going from one lower end of the range to the upper end of the range. And I'm not saying we're going to get there tomorrow, but I would say that if Sterling has a cyclical weakness period for it, I mean, we could trade back up towards 90 pence probably fairly easily, I would think, from current levels, right? Like you look at that. There's another chart I want to show you guys here in a minute that looks very similar to that, and I'll see if you guys can guess it. But what do you have to say about this Euro Sterling right now?
if you lot can get your noses out your 1 minute charts, you'll see this time and time again. But it's a very good ranging pair. Okay,
Hey, I'm trying to find volatility in the market. If I have to look at a 30-second tick chart, then I'm going to do it. Sorry.
It's good at ranging, you know, intraday, for weeks, for months. It's good at ranging the long term.
Yeah.
You know, you've got what 10 years there of ranging between the what is that, the low 70, the low 80s, and up
Yeah.
toward the 92s, 93s. 10
Right.
years of that. You know,
Right.
you only have to wait for those edges and just trade them. You know,
And you break
trade them with
out.
your eyes shut.
You break out, and it's a big breakout. I mean, you got to respect it. So I want to ask, even not. I'm going to see if anybody in our audience that remember, this is one of the benefits of listening or being tuned in via Zoom. You can actually interact with us if you're watching us on Twitter, or you're watching us on X or on YouTube. Thank you guys for listening. But if you guys want to interact with us, you jump in via Zoom. For those of you that are listening in via Zoom, do you guys know another chart that might look something like this euro sterling longer term? Do you guys know any? Kman, Ryan, what do you guys?
Aussie Kiwi.
Yeah, that
Yeah,
was too easy for us. It was
Only more accelerated.
that's
Yeah.
right. All right, Aussie
All right.
Kiwi. I actually bought this one yesterday, Dale.
Yeah.
I picked it up yesterday on this little on the sell. I
Flag.
bought it at channel support yesterday, right
Yeah.
here at 115 and change. But look at this long term. This is the Aussie Kiwi.
That's
And you
something.
want to think about like a range extend. I know Kman knew that was easy. We've been talking about this a lot, but look at this. I mean,
It was. I studied all night for that question.
I mean,
No, I studied all night for my urine test today.
there you go. Well, if we can extend our move higher in Aussie Kiwi, and you know, we have a cyclically weak period for New Zealand. Matter of fact, there was just a Bloomberg article on how the RBNZ has just like completely dropped the ball, and we're going to be seeing rate cuts and blah 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 blah. Anyway, you know, you look at this potential move in the Aussie Kiwi. I mean, this is breaking levels we have not seen since you know,
huge.
2013. So
Wow.
I mean, yeah, I mean, you know, if this thing just makes its way to 120, you know, from 115, that's a 500 pip move. So, you know, these are some pretty big developments that are developing right now in the FX market, and hopefully, you guys are taking advantage of it. If you're not, remember, be in the Forex Analytics community. It's only $1 for 10 days to try it out, and also while you're here on our website, click right here, right in the middle on this yellow page to learn about trading analytics and what we've got going on, about our upcoming launch of trading analytics. It's free to be in our newsletter to learn. We just mentioned a couple of new features that we're adding in our most recent newsletter. You'll get a newsletter every Sunday that'll update you on giveaways that we're doing. So make sure you are involved. So, all right. Well, you know, we talked about a few big developments, but let's talk about equities at all-time highs or nearing all-time highs, and we have the U.S. dollar, Mexican pesos. You guys were mentioning a little bit earlier. It looks like we could head down towards that. I can't believe how heavy this thing is trading. I mean, I can,
Yeah.
but you know, we're almost down at that. That this is a big 618 retracement, just so everybody can see. It's that 1820 level. I bought it before. I'm long some right now. I'm not happy with it because it looks like we could actually break. But we also have the U.S. dollar, South African rand, which I'm also long some here. But we are at, you know, lows of the year. I mean, this is all carry trade, isn't it, Ryan?
All of it.
no.
Nope.
Well, I mean, you know, just
No,
risk
not on the
is.
rand. I mean, the rand has been outperforming actually earlier because there's quite and I posted all the articles in the newsroom, in our newsroom, so people who are in our community, they can check everything that's going on in the South African rand and why the South African rand is doing so well. It's all in there.
3% inflation goal. Boy, that seems like that's going to happen for us,
Yeah.
right? South Africa.
That's
Yeah,
for
but
them.
we have to remember that they were turning around 6%.
Yeah, and where's their interest rates right now?
I think their interest rates are about, is it still 6% or something?
Yeah, well above where we're at. Interesting. Great views here. And if you guys want to get to our newsroom, it's just in our chat room. You can go from our general chat room over to our trades room so you can monitor what we're doing. And if you want to know that, I just picked up the dollar Canadian long at 140.10 about a few minutes ago. That's where you're going to find out all that information. So good stuff. Thank you, Kman, for posting all that. You were just mentioning about the Aussie. One of the charts that I've been looking at here is, man, we are just threatening an upside break, aren't we? I mean, this is a tight range. Look how tight this range is. This is a less than 30 pip range.
Yeah, it's less than 30 pips here.
Yeah,
I mean,
for the
it's
week. I
very,
mean,
very tight. I mean,
very, right?
I'm not even sure it's gonna go, and still, if it goes, we still have to go beyond the 61.8 as well. So to really confirm, I would say that we're really taking off, and that's just 20 pips higher as well. I mean,
Can I ask you a question? I mean, you're somebody that have been buying Aussie on dips, and
yeah,
rightfully so. I mean, we've been finding, we get dips, you've been buying them, you spin
mhm.
out of it when it gets high. But I want to ask you something, because this is a topic that I on the week ahead video, I was like, man, if I owned Aussie, if I was positioned long in Aussie, like let's institutionally hedge fund. I'm like, look at copper risk appetite, and I'm like, I'm kind of overweight in Aussie dollars. Are you worried that the Aussie just hasn't reciprocated in this, stocks at all-time highs, yada yada yada? What happens if the Aussie breaks the 200 DMA right here? I mean, does that
You know,
elicit some serious selling?
yeah, could be, but until it does, it does not, right? But
Right,
yeah, it's
right,
it's a
yeah,
bit underwhelming. But then look at its cause in Kiwi. That's even more miserable.
right.
No, I think it's there's still a fair bit of uncertainty. I think if you look at the commodities, they haven't, yeah, they are kind of higher, but it's not really a huge move, right? If you look at we just around the average of 2025, really. In If you look at copper, for instance, but yeah, I mean, we could say that it's underwhelming because gold is at all-time highs, and Australia is a producer as well. And the RBA is still pretty hawkish, or let's say at least not dovish. And the rates is still at 3.6%. So yeah, maybe it's a little underwhelming, but I mean, never say never.
Yeah,
That's
there's a lot of people that are talking about China deflation, and I mean, which is another interesting topic that we don't have time to talk about today.
I'm
But
not so sure that Australia is looking that much. I mean, the currencies that the Aussie dollar is looking that much
at
over
China,
to China right now.
okay.
I'm not sure.
All right. Well, hey, we got the dollar yen at new highs. It's actually brushing new highs for the day right now. You can see it just trying to push higher. Hey, we have about 2 minutes and we have no data. I just want to make sure I'm
So,
correct with that.
Blake, could I put it out to you and uh, the dynamic duo? Anyone
Yeah,
have anyone have any conviction about yields in here?
I
What do
don't.
you think? I don't.
I don't.
No.
I
No,
don't.
we're
No,
right in the middle, right in the middle again. It loves sitting in the middle of the range, doesn't it?
yeah,
Well, here's the thing. You asked about yields, Dale. I have this, like, this wedge that actually broke to the downside in notes. And
yeah.
so I thought the breakdown here over the last 2 weeks would have produced higher yields. So I thought the dollar would strengthen. And I'm not saying it can't,
Yeah.
but because there was no follow through this last week, that's where my no conviction comes in from.
Okay,
So
that's a nice
It's
look
also
though.
still in a range, right? If you
yeah,
take
well,
away the
that's
blue
that's the
line, I
thing
mean,
is,
you're in a
yeah,
range. If you
yeah,
take away
yeah,
the channel line, it's in a
Maybe
range.
you got
Yeah,
a head and
exactly.
shoulders there or something.
Yeah.
right.
Shoulder,
No,
right
I think
shoulder now.
I
It's
think the
too high, but
conviction
left shoulder.
I think
Go
the
ahead.
conviction will come once the shutdown is over and we will get data. That's where you can
Okay,
build a bit more
that's
conviction
a
about.
great point. Yeah, so the market doesn't know either. So
Yeah,
that's
No,
why
yeah.
there's nothing
no,
happening. Yeah,
Hey,
no.
you
very
know,
good point.
and just really quick, like we know the government's going to reopen now. I mean, we're going to vote on, even though the vote's going to take place. I thought it was going to take place today or tomorrow.
I think
Today.
this afternoon.
Yeah.
Okay, so this afternoon we're going to get the House, then Trump's going to sign it. The government reopens. One of the, if you listen to the week ahead video, I said, hey, as soon as the government reopens, short gold. And when they reopened, well, when Senate passed the bill 2 days ago, I sold gold. Now I sold it at where we're at right now. I mean, I'm up just a little bit, but I'm basically I sold it at current levels. But that's why that was going to be my trigger for gold. So I wonder if we're going to get an actual reaction when the government actually reopens. I don't know.
I think we probably apart from a little confirmation move, just to make sure that they can do it. We've probably priced as much as we are, but we will now switch to data, and everyone's trying to guess when it's going to be released. We should get the September NFP fairly quickly if they want to do that, because the data was already done before the
Yeah.
shutdown. It's how we get all the rest of it, and the market is back to data watching.
Yeah, I guess it is. All right. Well, I know Dale, you have your guest. Is your guest here?
Yeah, Dana's here. Dana, will you please accept the promotion? I promise I'll demote you after it.
So Dana,
Thank you, brother.
click the accept there. I'm going to go ahead and do the same thing. I'll try to promote you as well, Dana. Ryan Kman, thank you guys so much for always getting us prepared for the trading session. I know I look to you guys when I get up in the morning to listen to the recording of the flow show. And if you guys are in North America, you guys are in the United States or in Canada or somewhere, and you guys, in my neck of the woods as far as time zones, you guys want to get prepared for the day, make sure you guys are listening to the flow show, which Ryan and Kman do every day. So thank you guys for that. And Coach, have a great interview with Dana. Well, as
Yeah,
soon as
they're
Dana's
like
over.
Robin and Batman, those two guys.
They are. They
And
are.
so which one is which? Go ahead, Ryan. I'll let you make the call.
But like what?
Batman and Robin. Which one is which? You two guys.
No, well, sometimes some
None
people
of,
call us
none of
more
us
like
can
Laura
be
and Harvey.
Robbie because Robbie has hair.
All right, you get to be Batman. See, not having hair is an advantage sometimes. So anyway, thank you, team. Nice
Thanks, Coach.
job.
Mate.
All right, so Dana Lyons, my trading warrior brother. Always look forward to, looking at your charts and talking to you. And welcome back, buddy. How are things going for you?
Thanks, Dale. Always great being on. Things are great. How are things going with
Hey,
you?
things are good, bro. Things are always great. The markets day to day, that's just part of the journey. So, I'm going to expect that you're still on a lot of longs. Even, let me ask you this. How did you handle that one last Trump tariff tantrum when he was going to raise? We had a pretty good break. And then we had this pretty good break last week that was, what, 3% or so before the reversal. Were you able to stay long through those events, or were you pairing? And where are you now?
Yeah, good question. Interesting question because let me see here. Let me try to share
Because
my screen here.
I'm pretty sure that maybe even last week that some of your work might have at least been before Friday flashing yellow at the
Yeah,
minimum,
that
right?
oh, you know me well, and you know our system pretty well at this point, Dale.
Yeah.
So just as a primer again, we operate on with an overriding quantitative risk model. So our the main goal of that model is to figure out which way the overall direction is going, up or down, and then align ourselves primarily with that overall direction, because studies have shown 75 to 80% of the direction of a particular equity is due to the direction of the overall market. So we
Okay.
get like 3 or 4 signals a year. The last sell signal we got was back here in December,
Yeah.
mid-December last year, right before that initial break. And our model really weakened all the way up into these new highs into February. So we were very defensive going into the tariff
Yeah.
tantrum.
Right.
Uh, Turned positive right at the end of April, and we've been steadily positive since then. I
See
remember
that
talking.
that one big black candle that
Yeah.
was the Trump's.
So getting to that, I was on a show, not your show, a different show on I think the 8th, okay,
Yeah.
October 8th. And last I had checked, it was all systems go, and I checked after the close on October 8th, and we saw some really material deterioration in a couple of our key indicators related to some breadth and some momentum stuff, which again always reinforces the notion that the models are much smarter than we are. They
Yeah.
can go dive much deeper, and it's like AI, it filters everything much quicker than we can,
Yeah.
because on the surface everything looked good. So that got our antenna up, and we had that quick sell off, and then we had the recovery. Our model has deteriorated ever since then. So into this rally into new highs, we use that opportunity um, to lighten up, to get a little bit more defensive. I think this
Yeah.
is missing yesterday's.
Yeah.
Uh,
It is. That's
uh,
yesterday.
yeah. So we've been getting a little bit more defensive in the last couple weeks into the rally. Um, we have.
Semis are you probably, I guess, that if there's one group that's kind of been leading the way down and not recovering as much, where are you on semis?
Yeah, so here's the thing. We've been getting defensive on areas that you should be getting defensive in. So something like obviously S&P is back up closer to the
Yeah.
highs. You look at the equal
Yeah.
weight S&P, which a lot of people have taken note of. And this says yesterday. So still below the highs, still struggling a little bit relative to, the cap weighted or price weighted averages, the major averages, and something like let me pull up uh, the mid cap even. Some of these broader averages have continued to kind of lag, so never even got back to last year's high. Um,
Yeah.
Still well below the highs of the rally. So we've been getting defensive in things that mirror the indicators in our models that have been showing
Staples.
kind of the lagging broader market, really related to the broader market, not
Okay.
necessarily even the defensives, but those areas you mentioned, semiconductors, um, and the Nasdaq and tech in general. So we've been, heavily concentrated in those areas, those the tech areas, the growthier areas of the market, because that's the other leg of our investment philosophy is is investment selection.
Right.
We like to stick with relative strength and concentrate in those areas that are performing the best. So semiconductors being one of those areas. And some other tech areas. Yesterday, we're back up here testing the highs. So we are still heavily concentrated in tech, semis,
Okay.
the growthier stuff, and less in some of those defensive names, like you mentioned, like the staples. Although we still like utilities, they've performed
Yeah.
very well, still performing well. And then you have some newer relative strength names that have come on over the last month or so, like biotech. This is one of our favorite newer relative strength names, FBT Biotech.
Nice.
Kind of had a nice cup and handle
Is that,
breakout.
that's kind of compared to the market, it's biotech almost always been kind of an uncorrelated sector compared to the rest of the market. I've seen so many times the market's doing great and bios are getting hammered. And where it's not like just the flow of the market, that at times it comes alive and really outperforms, and at other times when the market's performing, it isn't. Do you see that happening? Or is it
It
always
seems like in
coach?
recent times, it seems like it has been much less correlated, and healthcare in general has been much less correlated. I think there are, components to it related to policy that certainly since COVID,
Okay.
that
Yeah.
has kind of made it a bit of an outlier. So certainly this year, it didn't participate as much in that rally off of the tariff lows, but really has come on of late. So I like that.
Right.
I like the or lower correlated or uncorrelated assets, which we really kind of look for in terms of identifying both the relative strength and then also issues or sectors of the market that might not have as many eyeballs on it. Everyone's
How
watching
about
the S&P and
right? I don't think a lot
semis.
of people are watching natural gas stocks, and that gas has exploded here in the last few weeks. Has that sector popped up on your work at all?
Not really, because we call it the Widowmaker for a
Yeah, I know.
reason. It's been a difficult one to trade historically, but I know what you're saying. It has come on of late, um, which is on our radar. Energy in general, we've been keeping an eye on because it has lagged for a while. You got nat gas, certainly
Yeah,
approaching the former highs, but that's been an
yeah.
unpredictable one for us to trade. Um, One area we are looking at in terms of energy that I think will emerge eventually. If you take a look at just the XLE,
Okay.
uh, which has, you talk about uncorrelated or less correlated. Um, this one has lagged for a time. We have, let me pull that one up. It certainly has lagged um,
Yeah,
uh, overall, but if you look at, I'm not finding. All right. Um, if you scroll out a little bit and look past this year's kind of or the last year's 12 months worth of underperformance. It's really just biding its time here, I think, at the former highs, which it hit back in 2014. So we like the prospects in the longer term after this digestion is over
yeah.
for breakout and kind of probably a new longer term up leg higher. So waiting for that. We don't have
Okay.
any allocation to it right now. While we're waiting for it to kind of digest, because obviously had a huge run while some of especially in 2022, while some of the rest of the market basically was pulling back, going through a bear market. This has been kind of consolidating, refueling, no pun intended, for that next run. So not sure if it's here yet and ready to go, but eventually I think that's on our radar.
What are you doing with TLT? I mean, it broke out, it's held a breakout a few times. It got up to resistance. People are, since we haven't had data, it's a little more difficult to trade, but the bonds haven't done anything wrong that I could see so far. As long as TLT, we hold that. I think it's 88 and a half level.
Yeah,
Okay, there's a yield.
we're long 10-year and 30-year.
Okay,
Long term, this is where you have to separate the duration. Long term, as you know, we think we're going up for
right.
in yields for decades or at least decade plus still, based on the long-term cycles. But near term, I think the benefit of the doubt is to the downside. The level to watch is certainly around 390 on the 10-year.
Yeah,
I think that's the key support area. But we're long. I think the benefit of doubt is to the downside. If we could break that, I think we're down in like 3.25 range. So we're positioned for that right now.
yeah.
On the 30-year, it'd be more like 450 is the range right now, but I think we can get down in the low fours. So we're positioned long in the bond market right now. Again, that's not our core competency,
Yeah.
we're equity managers, growth managers, but we do see opportunity right now on the long side in bonds.
Okay. Other commodity related sectors. I mean, the gold and silver miners had tremendous runs. We're getting a little bit of a correction, but do they still look good to you?
They look good longer term still.
Yeah.
They've done nothing wrong longer term, but
Yeah.
these are the kind of when you have
A
investments go
parabola.
parabolic, yeah,
Yeah.
you got to take some profits. And we had some good markers to take some profits. You're looking at GDX,
Yeah.
hit that 127 extension off of the long-term bear
Oh,
market.
you fib guy, you. All right.
Yeah, well, I mean,
Yeah.
when you're going parabolic like that, you need some kind of a marker to
Yeah.
help you out. Um, as well as that 261 from the post 2020. So took some profits there. Obviously that parabolic move is over. I think we need to consolidate for a while here, several months. So
Okay.
we did trim some profits. We're actually putting also putting some hedges on into this latest move. You look at SLV, for example. I mean, why would you not take profits as it's testing the all-time highs at 20 from 2011? So took some profits there, bouncing here
Yeah.
yesterday. It's not on here, this bar, right
Yeah.
up to that 61 retracement. So we did take some, we did add, took some more profit, added a little bit of hedge on. I think we're going to be in a trading range here for a while. So
How do you hedge GLD and SLV with what instruments?
well, we've had these on for a long time. So from a tax perspective for our clients, we don't want to mess with that. So we're using some inverse funds
Okay.
to hedge, both in silver using ZSL, and then
Yeah.
with the gold miners using dust DUST
Yeah.
to put some
Okay.
and the silver miners as well, hedging with dust there. So again,
Okay.
I think we're probably in a trading range in the near term for a while. So and not wanting to cash in those longer term gains, just
Yeah.
put on term hedge.
Yeah. I think Dust is putting in a higher low so far.
Mhm.
They pretty much turned that ETF into Dust, didn't they? And to me, it looks like maybe there's a play to the upside there in Dust.
Yeah, definitely. I
It does.
think GDX has maybe another 2 points to it.
Yeah.
And we would be adding some more dust to that there. Again, I don't think we're shooting right back up and to new highs in the metals complex. Um, the run has been had for now, and I think we digest a little bit here.
Okay. Um, Anything else high conviction you want to share?
Yeah, I mean, like I said, right now we have some red flags in terms of breadth, in terms of internals, which has us a little bit more defensive. But as I mentioned, stick on the long side. You can stick to the things that are still working, like the we've
Bios.
talked about tech and the semiconductors, and the other thing we've talked about. You and I have talked about for some time is, international.
Yeah.
These
Yeah, you like
these
these.
they've been they've been laggards for so long that right now they're starting to come on and maybe just beginning, those like longer term secular bull markets. Like here's just the EFA, for example, hit new highs, emerging markets. Um, this looks like a little bit like that. We talked about the energy fund, but as this one tests the former highs, might digest for a little bit, but has gone sideways really for the last couple decades, and that breakout could be explosive. We've talked
Yeah.
about um, a great example of a secular bear market. turning into a secular bull market is Japan.
Yeah.
Obviously, we've talked about that in the past. Really like Japan and the longer term prospects. You look at something like even this Japan, the small cap Japan,
It looks like
um,
silver, Dana.
continues to go nuts. What's that?
It looks like silver. Looks like another parabola in the
Yeah,
making,
yeah.
doesn't
I mean, you got to take profits along the way. Here, we talked about this last year when
it?
the
Yeah.
Nikkei rallied up to
That
test
was a
those
great call.
1990 highs,
Yeah.
digested for a while, and then another break. I think this has many, many years left in it, uh, the Nikkei, and you've got a lot of international plays that look at even Europe. I mean, Europe has been a dog for how long, and just embarking on, longer term, perhaps outperformance at least versus the US. Then you have other,
When you do these,
individual emerging markets like Argentina has
I
been
don't like that
digesting
one.
here for a while.
The
That should
40
continue
billion's
higher.
gone now, and that's
What's that?
the 40 billion's gone after that pop. Anyway, I wanted to ask you, what we gave Argentina. Um, when you do these foreign funds, how do you decide whether to be have it dollar based, so it's in dollars, or are there times you want the currency bump of that particular area of the world that you're buying ETFs in?
Right. We filter everything through a relative strength model, quantitative model that we have, and kind of deciphers it for ourselves. But really, all you got to do is look at price. Here's the hedged EFA. Okay, so HEFA would be the ticker symbol. We've owned this for a while. So this has hedges away the currency effect. So this one
Okay.
obviously has been leading. You look at the EFA. This is unhedged. This one also looks great. So
Yeah,
this what does that tell us? That tells us that it's not really about the currency right now. It's about
at all.
international relative outperformance. So we own both of them. There are
Yeah,
times like last year, really in 2024, when the hedged the Japanese hedged ETF was really outperforming EWJ. So we took our cues from that okay, we really want to be uh, outweighted or overweighted DXJ. So which was here is your parabola kind of
yeah,
consolidated for a year and now has broken out again. That obviously was outperforming EWJ for a long time, but look what
yeah,
EWJ has done now. This is a lifetime breakout. That's powerful stuff. That one should continue for a long time. Obviously nothing goes straight up, but
right.
that just letting price dictate our decisions. Both of them look great now, which tells us, okay, it's really an international story. It's not necessarily just a currency story.
Yeah, the dollar's been so range bound anyway. Do you have a view on the dollar? Sometimes you do.
Yeah,
It's a tough call right now.
yeah, it has been so range bound. We've had a small long position on based on usually we're trend followers. Relative strength
Yeah,
tends to dictate that we're trend followers. It had a reason. We had a reason a couple months ago to maybe make a mean reversion type play. We had the 61 retracement from that
yeah,
20 from the COVID low as well as this long-term kind of uptrend line. So we made a play back here. We're long term. We're long from a short-term perspective, still long a
okay.
little bit. Took some profits. So I think benefit of the doubt is still from a
Up,
longer term perspective, maybe down to
okay.
sideways, but shorter term, we made a short term long play, and I think that's almost run its course for us. We don't have a lot of conviction on that one,
Okay.
but
Didn't
still have
think
a
you would.
small remnants of that long on.
All right. So, Dana, I know you manage money as an RIA, but you also have uh, things for, people could contact you for someone who's an active manager instead of just going passive, which may not work one day. Um, and also, you write a lot of great content that people could use to trade. So you want to tell us a little bit about that?
Yeah, sure. As you mentioned, our main business is an RIA where we manage on a discretionary basis. We started this service for traders, active traders, called the Lion Share. About I guess it's been about 8 years now, 7, 8 years, 6, 7. Can I say that? I got kids. So this one, oh, basically it's for do-it-yourselfers, but I get on there every day and make a video and tell the members, what exactly our models are doing, what we're looking at, and actually, we'll go in and tell you exactly the moves that we're making on a daily basis. So you can track all of our moves on a daily basis, long, short, everything that exactly everything that we're doing in our managed business. You just have to pull the levers. So that's a great resource, I think, for active traders. Would be the lion's share. So if you're interested, we do have our biggest sale of the year coming up. Incidentally, our Black Friday sale, but it starts next week. But I did set for your members. We have our sign up page is already geared up for that membership. It's 40% off. So if you go in there now, you can get that. And then, like I said, you get basically real time all the moves that we're making and exactly what we're looking at in all the markets. So that might be something that your listeners might be interested in.
Okay, well, I've talked to Dana for years, and he's a very disciplined guy, and a lot of his calls and the way he's managed money has been great. For example, we're almost at year end, Dana. Um, how much are your funds up? Are you beating the S&P?
Yeah, we're beating the S&P by a little, which I'm proud of.
Okay,
And we did it in a couple of different ways. As active managers, you can do it in a couple different ways. First quarter, we had almost no drawdown versus, 20+% for the averages,
market.
which I was
Yeah,
super proud of. Got a timely buy signal. We weren't 100% or else we'd be out shooting the averages by a lot more. But the other way we can outperform as an active manager, like I mentioned, was investment selection, relative strength outperformance. So we were really concentrating on a lot of the metals, the tech, uranium, and those types of plays in the
yeah,
second and third quarter, and that has allowed us to, even with a decent cash position, to outpace the averages. So that's our goal: outperform the market over a complete market cycle, and do it with much less risk, especially in those really bad markets.
yeah. And Dana's not afraid of the esoteric markets that a lot of RIAs won't touch, things like uranium. Okay, so
Yeah,
they're
we'll go
afraid.
over. We'll go to wherever the action is for sure.
All right, well, my trading warrior brother from Chicago, Dana Lyons, check out his website. And I always learn something from Dana every time I talk to him. And hope you have a great finish for the year, Dana, and uh, make up have even larger performance in the next couple months over the S&P. But people beating the S&P this year is there are a lot of people that are playing catch up now. So congratulations on that, and also thank you for coming here and sharing your great technical work backed up by your fundamental narratives. It really edifies us here.
Yeah, appreciate that. Always a pleasure being on. You got a great audience. I love watching your show. So many smart guys on there. So always a pleasure being on. I'm always learning a lot from you, specifically on your show and on your Twitter account. So appreciate you. I
Mm,
have for a decade now or so. So
yeah,
be good.
we're like family
Blessings the
now.
rest of the year. Yeah.
Yeah, after 10 years, you got to be family. So, all right,
That's
my
right.
brother. Thank you so much, Dana. I'll be talking to you next year sometime. So,
Sounds good. Take care,
and
everyone.
and go Bears.
That's right.
I was almost surprised. Bears? Who are they? Yeah. Anyway, go
Yeah, well,
Bears.
they haven't, for the first time maybe since we've been talking over the last decade, they haven't been eliminated from the playoffs yet. So
Yeah, that's
who knows?
already a successful year, right? Any,
Yeah.
anyway, buddy, take it easy and good hunting.
Take care. Appreciate you.
All right, thank you. So, everyone, that's a wrap. You're welcome, everyone. Yeah, Dana's great. Check him out. Wouldn't be talking for a decade unless I thought he brought something to the table, and he brings plenty. And remember, don't just count your sectors, count your blessings. And I'll see everyone tomorrow. Good hunting the rest of the day.